A couple of months ago, I had maybe a year ago, I made a reel that showed you how to identify when the market is creating new highs that you've like it's never achieved before. So I'm going to show you both ways just so you have this as a reference because I know that my reels disappear and not everyone uses Instagram. So what I pulled up today, I just pulled up a generic NQ chart and I am on the 4 hour. So I'm going to show you how I do this on every time frame just so you can see how it works. All right. All right. So I like to do a top-down analysis. I do like to look at the weekly just to see what's going on. And you can see right here that we definitely have broken the previous high, which is really nice. If I am able to draw Fibonacci on this leg, I will, and I will go ahead and identify levels. Because we haven't had any major pullbacks, I probably personally will go down to a smaller time frame. However, I'm going to show you an indicator that you can use to just assist you. All right. So go here to indicators. You are going to type in pivot and you're going to use pivot points standard. So when you click on this, it's going to look absolutely crazy, but don't worry about that. We're going to fix that. Double click on the actual indicator right here, or you can access it through this little area here. And what we're going to do is the number of pivots back, we're just going to change that to 1. Okay, so we're going to change that to 1. This way we don't have a whole bunch displaying. Now, I don't like to keep all these support and resistance levels, but it doesn't really affect me. It doesn't bother me because I'm not letting it confuse me. If you don't like it, you can literally just take them off, and this will remove the number of support and resistance levels. And this is from the pivot area. So you have a P from the pivot area, and then you have your resistance and support levels. Again, it doesn't matter. Just make sure you only have one pivot displaying so you don't get confused. Now, what the pivot does, it collects data from the time frame that you're on, and it will create levels based off of that. So if you do not know how to use Fibonacci, don't freak out. I have a video that shows how to do that, but let's just say it's just not for you. Like you're not there. Cool, I got you. Don't worry. Just do this. All right, guys? So this is going to give you resistance levels based off the weekly time frame. Now, what I'm going to do is I'm just going to quickly draw one just so you can see the difference as when I go to daily, now it's adjusted based off of daily information. So if you are, let's say, a 15-minute trader, you may want to use the 15-minute. If you're a 5-minute trader, use the 5-minute. You're going to use whatever time frame you typically use to identify your take profits, okay? You can also use what you use for entries, but essentially your take profit areas are what you're looking for and you'll notate them. So that's one way that you can go ahead and identify new highs or lows, but in this case, new highs because we have such a bullish market. Now, I'm going to quickly, let me hide this real quick, and I'm going to show you what I personally do. So, for example, I like to go on higher time frames like I showed you and used fib, but in this case, I like to use the 4 hour because I've learned that Nas or NQ really respects 4 hour like structure and levels. I love it. So when I'm drawing my fib for a bullish trend, I'm drawing it just like a trend line. I'm drawing it from the bottom to the top. So here's my swing low and here's my swing high. I'm going to identify those. I'm going to anchor my Fibonacci from here to here. And now what I'm going to notate is going to be 0, which is going to be the previous high. Okay, so that's the previous high, and that was the previous all-time high. What we're looking for is how price is going to react to that. Should it go back to this price point of 23,327? So if we are able to break that, my next area of interest is going to be minus 27. Now, with Fibonacci, what a lot of people don't understand is if we land on top of 0, we usually will extend to 61.8. So I will notate that just to be on the safe side. All right. So let's say, for example, we identify these highs and all of a sudden the market decides like it doesn't want to go there. No biggie. You just delete the levels that you delete them because it's nowhere near it. And then you just go ahead and do your normal charting. So at the moment, this is sitting literally right on market structure. Okay. So what we want to do is see how price is reacting to it. I'm not going to draw, well, I could. I was going to say I'm not going to draw a massive trend line. All right, so we're going to just see how price reacts to that. Now, if for whatever reason price is unable to create a higher high and we start to get a bigger bearish momentum down, we want to be mindful of how price reacts to the trend line, but not only the trend line. I know a lot of people talk about trend lines, but that's like 5-year-olds trading. You understand? So what we're looking for here is we're looking to see how price is going to react to that last level of structure and that last respected touch on the trend line. So if price still breaks the trend line, there's a possibility it could stop right here and keep going up. And what that is a bullish flag pattern. So a big one on the higher time frame. So we want to make sure we're not being manipulated if it does break the trend line. If it does, then we'll create levels based off of previous structure. So you kind of got two lessons in one, but I hope this helps. Excuse me, y'all, didn't mean to show that. So what you want to do is either use your fibs to identify new highs, or you can use your pivot point standards to assist you on whatever time frame you usually like to take your profits on. So give that a go and let me know what you think.